Hey traders, this is video 2 from September 10th's trading review. I already went over CTHR in the first video. That was a pretty long video because a lot was going on there. But the next stock that I traded was WEN. And I traded this for a triple top breakout. And you could see we had 1, 2, and then this was the third touch of resistance that ended up giving us a nice resistance, intraday resistance level on the 2-minute chart to give us some confluence. So this is the daily chart, and below is the 2-minute chart, which is my entry chart. So I wanted to, the general area was 805. That was the area we were looking for it to break. But this wick here on 826, this, let me circle it for you. The high of this bar was actually 808. So I get pretty precise with this stuff because I feel like it's important. And I wanted to see price get above 808 to consider entering, just to pay for a little bit of confirmation that this thing could be giving us a breakout. So let me go here to the 2-minute chart. Basically, it gave me a really beautiful intraday break at that 805 level. Here's the market open, this dotted line, and 805 is at this rectangle right here. And you could see 805 was the exact resistance level that ended up breaking. Once it broke, I was like, okay, well, like I said, I want to see price get above 808 before I consider entering. And it did. It got to, I entered at 809. And basically, what happened from here is price started to move higher. It put in this resistance level, and I was thinking to myself, okay, this could be, the pivotal moment for this stock where it's either going to give us a fake out breakout, or it's going to, go to, or otherwise also known as failing, basically, where it could have, just basically failed off from here, and I would have, had to take a loss on it, or it was going to continue the momentum, consolidate a little bit. We had an edge here. Oh, market just closed. We had an edge here holding at this 810 level. And, a few edges ended up forming. We had an edge form here at this 808 level, which was, remember, the breakout point that I was looking, or the price I was looking for the general breakout point. And this is a really terrible, terrible lesson of getting low ticked. You can see that I literally was low ticked to the penny. The stock, this bar ended up getting bought right back up, holding support again, and then gradually continuing higher into my target, which was 822, 824 level. And I'll pull the extension that I had up earlier. I had this extension. I was looking at that 820 level, and unfortunately, I ended up getting low ticked, which seems to happen to me a lot because I'm not giving it enough room. Basically, my mindset on this was I was looking for this 808 level. Let me redraw this so it's clearer when I'm explaining it. But I was basically, we had a run and we had a pullback, right? And I was pulling retracement levels on this, and I was noticing that basically it could have pulled back to 806 or 807, and that would have been, probably the most I would have allowed it to pull back to. But unfortunately, I made the mistake of keeping my stop a little too close. And I said to myself, well, if this edge broke right here, this edge here, I don't think I'd want to be in this trade anymore. But you could see it broke, but it took out a few people and then slammed right back up. So this is a good example of what it's like to get low ticked. And unfortunately, it's one of those things that if you're not really smart with your management and looking at the possibilities and probabilities of what it could and what it will and won't do, or what it can and can't do, should I say, then you can end up in these situations. And what I really should have had done was I should have had my stop behind this original breakout point of this 805 level. Because if this was going to stay intact, I expected this 805 level to hold. but for some reason I was looking at this level, this 810 to 808 level. I was looking at this level and I was like, well, I want this level to hold. The market shouldn't go past this level. Well, it really didn't. If you look at it, it low ticked me, and then, or I got low ticked, and then it continued higher. So this is really a good example of why you need to keep your stop behind where the market should not go for the trade. And in this case, this 805 level should have held for this stock to stay intact. So that was a pretty good lesson learned. So it's happened to me before, and I'm working on it. It's definitely not my strong suit. It seems to happen to me a lot, so I need to focus and work on and 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 push myself to not pull my stop up too tight, because you're in a trade and you're like, well, I don't want to give back profit. I don't want to lose any money, blah blah blah, and you start to get emotional about the trade, and that stop just starts creeping up higher and higher and higher, and then by the end of the day, or by the end of it, you're low ticked like this. So let's go over some opportunities that I missed. This morning was a cluster for me. I woke up late to the market to begin with. I That was my mistake, but I had so many alerts going off, and I had so many stocks were showing opportunity. It was crazy this morning. So I'm not very happy with my performance today, but I did end the day profitable, which is good. This WEN was basically a scratch trade, just took it for a few cents. And then CTHR was profitable, so that was good at least. Obviously, I left a lot on the table with CTHR, but at the end of the day, are you profitable or not profitable is the question, and I was profitable. So I'm going to go over some opportunities just to give you guys an idea of what's out there and what kind of opportunity you can have in front of you for profit. So this is BDE. BDE is the ticker, and I really, really liked this one. Unfortunately, it fell off my radar. I don't know how. I think I have these basically screens that give me give me 4 tickers at once, so I can look at 8 tickers at one time. But like meaning their daily and their 2-minute charts at one time. But I need another monitor or something, because I'm switching out tickers, and this one just fell off my radar, unfortunately. So you could see that this breakout level is around 1102, or I'm sorry, 11. It was actually 11 on the dot. Like this high was 11 on that bar. This one was 1097, and this one was 11. So the resistance was 11. And I noticed this morning that, let me pull the 2-minute up. This morning I noticed that we had that previous yesterday's resistance into that 11 area, closed right into that 11 area. And this morning, let me zoom in. This morning, and I'm just going to kind of try to go bar by bar, I think this is what happened. Basically, I had a lot going on this morning. So this dotted line right here is market open, and I saw this red candle, okay, and then I was watching it, saw this kind of this price action, big range. I don't know if there was a spread or what, but and then I was getting alerts, and it just fell off. I was putting other tickers in, taking other tickers out, just trying to find what was the best. And what I should have done was I should have set an intraday alert at this 11 area, and if it broke 11, then I would have it would have caught my eye again, and I could look at it. So how I would have probably managed this, I'm gonna say I would have probably got a fill around 1105, around that level, just being conservative with it, basically, or generous with it. I probably wouldn't have gotten a fill right at this 1101 area. So maybe even higher, who knows. But this thing ended up giving us a nice little intraday break. This was that was in line with yesterday's highs. That was in line with the daily breakout point, and it took off from there. It was absolutely beautiful. but unfortunately I missed it. And then EGAN, this one I did not miss. I just didn't take it because I don't know what the heck was wrong with me today. But we had a continuation breakout, nice run, followed by a pullback, and then continuation of the run. That's what a CT is. And the area I was looking for on this was 14. And lo and behold, if we move to the 2-minute chart, we had an intraday break at this 1395 level. So, perfect, because we had a nice intraday break. The entry would have been right here at 1401 and right at this level. And that's not far off from the intraday break. So that would have been a nice play, nice run, pullback, continuation. It was just, I don't know what I was thinking. I was hesitant. I was, for some reason, I was just hesitant about it, and unfortunately missed out on that opportunity. And then NOK was okay. Honestly, I didn't like it because I don't like this range. These bars are just, in my opinion, crappy range. I want range like this, like that bar right there. But I didn't know if we were going to get a tiny little bar like we're getting today or a nice big bar. And honestly, there were better plays out there, so I just kind of let this one go. But it did have opportunity if you wanted to give it a quick scalp, or just give it a try, even not for a scalp, just to hold it and see how far it could get. And it was good. Nice price action. Well, not nice price action, but I mean, it respected areas. Like you could see, it never broke below that original intraday breakout, which is nice to see. It respected areas and it continued higher. So it was a breakout of a resistance. It was a continuation trade, basically, run, pullback, and continuation of momentum, but not really an A play in my opinion. But it's still an opportunity. ZINC was another one. This one was another one I'm kicking myself for. I really don't know what was wrong with me this morning. 13 was the breakout point, and let's see, we could zoom into this 2-minute, which is our entry chart, and 1313. Literally, we had an intraday break right around that level. This could have been considered in the intraday break as well, around this 13, 17 level, and this one took off from there as well. So lots of opportunity today. I just wanted to show you guys what I did, what I didn't do, the mistakes that I made, because that's where you learn the most, is from your mistakes. And mainly today, my mistakes were pulling my stop too tight. Otherwise, I would still be in WEN, and I'd be, I would have never had reason to get out of it. And that would have been a profitable trade. And CTHR, that one was tricky, that gappy price action. But if I just, stayed a little bit more calm and didn't let that gappy price action affect me emotionally, I would have been able to manage that trade a lot better. Maybe been able to take a lot more out of that move than I did, because I really only got a tiny, teeny percentage of the overall breakout move.